The Domestic Equity Fund is a general equity fund focused on the South African domestic market, with 80% invested in local South African markets and up to 20% in international markets. I'm Robert Towle and now manage this equity fund. The fund, over the years, has received 2 Raging Bull Awards in 2012 and 2014, managed at that time by David Shapiro. As David steps away from the fund after many years, I now take over. Internally, I have managed the domestic model for our private client portfolio managers for many years and take this model and integrate it into the unit trust now. As before, the unit trust looks for companies that are mispriced and show value to their long-term earning estimates. We also add further alpha by adding a component of growth stocks. In South African context, growth stocks are slightly different to the international market, whereby current growth is synonymous with tech and new disruptive industries. Industries like biopharma, genome editing, and AI are currently just not available on the domestic market, and growth in South Africa often comes from cyclicals such as commodities. Understanding the South African context and not trying to implement strategies developed for broader, deeper markets is key for this fund. Understanding liquidity and ownership of local stocks in a small market such as the JSE is vitally important and complements our fundamental analysis of companies.
Our fund is well supported by Sasfin's experienced portfolio managers from around the country who contribute to our monthly strategy meetings. This gives the fund manager a close connection with businesses across the country. A round-table approach, but with a single driver on the decision process, allows the fund manager to see multiple angles and investment approaches to local companies that are often hidden by bias that you often get in a lone wolf approach that you see in some funds. This connection, along with strong fundamental financial analysis of companies and sectors, allows the fund to buy companies with long-term financial benefits for investors.
In this current increasing interest rate environment and higher inflation, the fund looks to invest in companies that deliver stable dividends through different market cycles and produce strong cash flows. Currently, there are sectors in the South African economy that fit this profile, such as the tobacco, commodity, banking and financial sectors. Inelastic demand that one finds in the taxi industry is a good example of a business which has pricing power and can pass on cost increases to the consumer easier than companies without pricing power, such as food producers, where pricing is often regulated. The current market volatility can cause well-managed and defensive businesses to become mispriced and affords the fund the opportunities to buy well-managed companies at a far better valuation. The fund has delivered long-term inflation-beating returns since inception in 2010, by looking for this cash flow and dividend dynamic. The fund's mandate is also flexible enough to incorporate income components and property when the opportunity arises. The Sasfin Local Domestic Equity Fund is a strong standalone fund, but it is also an excellent building block to add to Sasfin's offshore portfolios and as a growth component to complement Sasfin's income portfolios, allowing one to build a well-balanced long-term wealth solution.